Welcome back. Today is on 15th of July 2024, Monday, and I want to talk about my anticipation for the DXY for the remainder part of the year and how I'm anticipating the market to react. Now, the DXY, the dollar index, is ideally my benchmark, and it helps me to gauge how I'll be able to be trading those particular foreign currencies. Now, the DXY opened for the year somewhere here for the first quarter. The market gave us some sort of the accumulation for the early range. In the next quarter, it gave us the manipulation as it dived into this particular imbalance over here, whereby there was the manipulation for the year. And as it did so, there was this particular high on the DXY and this high. So this high was higher than this one. It made a higher high. So when the DXY makes a higher high, because it is inversely correlated to the foreign currencies, you're anticipating the foreign currencies to make a lower low. So DXY made a higher high. At the same time, you anticipated GBPUSD to make a lower low, right? So let me tell you what I mean. Now, the same area of price action, the daily time frame, DXY made a higher high over there. You anticipated GBPUSD to take out this low to make a low low, but it failed. It made a higher low instead. So you can be able to see, instead of GBPUSD making a lower low, it made a higher low. That is the crack in correlation, and that is what we qualify to be our smart money divergence. And this one gives us the indication that GBPUSD is gaining more strength and anticipating it to be bullish, whereas we're anticipating DXY to be bearish. And the rally above this particular short-term high on the DXY was meant to take out liquidity, but anticipated it to reverse to the downside. But in regards to the relative strength analysis, this one is way much stronger. Now, in regards to that, at that particular area whereby the market dived into our area of imbalance after taking out this particular high on the DXY, we had the formation of that particular smart money divergence, giving us a vibe that the DXY is bound to be moving to the downside. So this particular quarter, it gave us the manipulation for the yearly range as it dived into a significant PDRA. The imbalance after taking out this particular high gave a reversal. The market consolidated a little bit over here, gave us a breakdown, taking out this particular short-term high, forming smaller fractals of liquidity or smaller areas of liquidity, and it gave us a retracement back, took out this particular short-term high, took out this high as well, as it dived into the 50% of this particular green candle, which is our bearish order block. So I'm anticipating the market to continue dropping to the downside, because a lot of the bigger picture perspective confluences also indicate the same, and the narrative that we're having in play. Now, the market tends to be moving as a result of ideally two things, where the orders reside in the form of liquidity, whatever is happening outside the candles. So we are having sell-side liquidity pool over here, or the market can be able to be moving to areas where we are having inefficiencies, imbalances, so that can be able to offer efficient pricing by rebalancing. Now, in as much as the market is on the sell side of the curve, because after taking out this particular, breaking this particular low, giving us a market structure shift, the market was on the sell side of the curve because we're also operating on a market maker sell model, where this is the original consolidation. It doesn't mean that it has to be in a clean consolidation. The idea is that it tends to be housing the liquidity pool. Then you're having an area of smart money reversal after taking out this particular liquidity pool. So you're anticipating the market to be on the sell side of the curve, with the anticipation that the market will be able to clear this particular low. So before it takes this particular low, this area is also an area of imbalance. There is open, so I'm anticipating the market to rebalance and the market to reach to the downside objective. So I'm expecting maybe the market to, be bearish on the dollar all the way to the 4 months thereabout before we check on the necessary profit that the market will be able to be giving us. But I want you to understand the market won't be moving in a straight line, and this is the bigger picture perspective. It doesn't mean that it has to be immediately. Remember, this is the daily time frame, and you'll be able to take a couple of days for the market to reach for these particular areas that I've just highlighted. So the best scenario is trading in line with the predominant order flow. If the DX is bearish, you're expecting bullish price action on the foreign currencies, Euro USD, GBP USD. If the dollar index is bearish, you're expecting USD CAD, USD CHF as well to give us the bearish vibe. But there are elements of retracements will be able to occur on the lower time frames, so be very, very mindful of that as well. But ideally, the DXY is still bearish, and we're still anticipating the market, the foreign currencies, to be bullish. So I hope this particular short video will be able to help, and let us meet in the coming videos. Talk to you soon. Bye bye.